executives, and all gathered here, all protocols observed. This morning, we thought we should take the opportunity to address the press on certain pertinent issues that are in the media space, but most importantly, to start off by telling what we call the SSNIT story. It's our very firm belief that SSNIT has a better story to tell than anyone else in the pension space, and a story that is relevant to every working Ghanaian. And we need to share this story even before we address all the issues that are being talked about in the public space. We're all very confident that by the time we leave here, we'll have answered, or we'll try to answer, all the questions that have been raised. But most importantly, if there is anything that I want all those gathered here to leave with, the message is fairly straightforward, and I'm very categorical about it. I'm not shy about telling that story. And that is very simply that SSNIT is offering you the best pension scheme that is available in this country. That is the story that SSNIT has to tell you. So today's media presentation, we are going to start with our part of the story. We'll address the issues that are being talked about in the public space. Of course, everybody's favorite is the issues regarding the sale of our 60% shares in our hotels. And then obviously there's also a Shraj petition that we would like to talk about. Statements, we did say that we will wait and respond to the Shraj petition, and then we would come out to make sure that we explain everything to everyone. So let's start with our story. What is the unique proposition that SSNIT has to tell? We are the administrator of the National Pension Scheme, the basic National Social Security Scheme. From 15 to 45, you fall in the SSNIT space, whether you are formal or informal, or in the informal sector, you are self-employed, you can join the scheme. The message is very straightforward. It's very straightforward. And the message is that if you look at what SSNIT offers, we pay you a pension for life after you retire. That is the most important thing. And if you, be it mathematically or whatever, you look at what we pay you from when you retire to when you die, it's far in excess of what anyone would pay you if you invested your money elsewhere. That is a fact. We've done the maths. And if you bear that in mind, then in our view, the message is very simple. We are paying you a pension for life. What we offer is the best in the marketplace, and the value of what we offer exceeds what you would have received if you had put the money elsewhere. And we've actually worked that all out. And I think that if anybody's in doubt, we're happy to provide you with those figures. We certainly do better than the treasury bills. So we pay pensions for life. There are other products which make SSNIT worth it, and which even enhance our offering. And those products are inbuilt into the SSNIT system, or the SSNIT payment system. Nobody else offers you that. I think it's one of those things where people usually ignore them, but it's something that we need to highlight. First of all, there's a survivor's benefit. In short, there's a life insurance policy built into what we provide you at SSNIT. No other pension scheme would offer you that built into it for what you contribute. So if you take into account that life insurance policy, if the unfortunate does happen, your survivors, if you die before 72 or 75, they do get a survivor's lump sum. That's inbuilt into our system. Nobody else is offering you that. The second policy, or let's say the second policy which is in there, which is also very relevant, is what you get when you become invalid, or, so to speak, you fall ill and you're not able to work. If the assessment is done by an existing committee and you meet their requirements, you will also receive a pension for life based on certain criteria. And if you were to recover, it would be as though you'd always been in the scheme. Put those three together and we offer you the best pension proposition that is available. So before I go to all the other issues, this is what I want to leave you with as a message, that the SSNIT pension scheme offers you a better pension, better products than anyone else in the marketplace. If you think of what you get for what you put in, we are the best. Net contributions to us are 11%. If you contribute for the minimum 15 years, it's 37.5% of your basic salary. That's what you retire on for life. If you contribute for the maximum period, you get 60%. And the value of that far exceeds what anyone else is offering you in the marketplace. Just keep that in mind. We are paying you a pension for life after you retire. And that is a very important message I want you to retain and pass on to all your listeners, your readership, and anyone who listens to you. So that's key. Let's go on to the next slide. We've also put together some data, just to give you an idea, just to validate what I've told you. On the right, we just give you an idea of what SSNIT pays you compared to the 91-day Treasury bill rate. So when you retire, and we've been paying you for 12 years, what we pay you is almost twice what you would get on a 91-day T-bill rate, compounded quarterly. For 15 years, it's 2.5 times. For 20 years, it's 5 times. For 25 years, it's 17 times approximately. And for 29 years, it's about 46 times. I'm quite sure not many of you have seen this before. If you have, I don't think you've told this part of our story well enough. And this is essential, and that's what I started with. We offer you the best proposition available. The immigration benefits, I don't think it's that relevant to those in the room. So I'll go on to the next slide. So in summary, before I go on to the next section, which I think is the cause of a lot of excitement, I just would want to point out, and repetition is for emphasis, that we offer the best pension proposition. We pay you a pension for life, and that really is the message we want you to take out there for us. Long after I have left, and for that matter most of us here, SSNIT will still be around. SSNIT will still be around. And what we are offering really is the best in the market. The other point that we have to add, and it's most definitely something that we need to tell you about, is that your pensions are also indexed to inflation. I almost left that one out. And again, let's put those numbers there for you to see. On the left, what we highlight is that a member on pension for 7 years as of 2022 has had an overall pension increment of 132% approximately. If you've been on it for 17 years as of 2022, you've had an increment of 1,026%. And if you've been on it for 22 years, you've seen an increment of 3,864%. So that really tells you everything you need to know. So if you are here, you are, be it in the formal or informal sector, you are self-employed, the message is join SSNIT. Let's go to the other issues that we are talking about in the marketplace. There are about 5 of them, and the way we've put together the presentation is that we wanted to share our story with you. We are going to touch on some of these issues, and then we are going to go to the commercial justification of why we into our hotels businesses. And before I get there, and I'm sure I'll repeat it many times, the hotels have not been sold. The hotels have not been sold. That needs to be repeated. So let's touch on the ILO report as a starting point. The ILO report is an actuarial valuation which is done every 3 years externally. It gives us a good idea of where the scheme is. And based on some assumptions that they make, and some very good assumptions at that, they give us a good idea of what the future could be. It's based on assumptions. This is nothing new. We've been doing it every 3 years, and it gives us good guidance. And based on that, we adjust what we do, we alter what we do, we implement strategy around that to improve the scheme. And the most recent one which came in the press was the 12th of those. And I think the strapline which everyone picked up was that SSNIT was not going to be in business after 2036 and would run out of reserves. Again, that is very far from the truth. In fact, previous reports have suggested that we'll be out of business in 2025. And that's next year. And I'm sure you can be very confident we'll be here. And you should be very confident that we'll be here beyond 2036. Other reports have suggested 2034, and the goalposts keep moving. But for us, it's a good guide to look at the way we do things and improve them. We are constantly improving. The SSNIT of 5 years ago, 10 years ago, 20 years ago is very different from the SSNIT today. And 5 years into the future, SSNIT will also be a totally different animal in terms of the way we operate. So you should be rest assured that we are going to be around. We are taking some very significant steps to ensure that we thrive in this marketplace. We don't just want to survive, we intend to thrive, and we are. And the whole idea that we are running out of funds is not something that we even consider. We continue to make changes. We are expanding coverage. As you all know, SSNIT is a partially funded scheme. And so it's funded from contributions from the current contributors and future contributors, and also investment returns to balance. Currently, we've increased self-employed enrollment significantly. We've deactivated pensioners who have passed on from the system, saving us approximately 519 million. We call them post-pensioners, but essentially is ensuring that those who have passed on, given that we have a sort of a paper system out there with regards to deaths and births, we ensure that we deactivate all the pensioners that pass on, and significant savings are being made there. We've been very successful at bringing on new contributors. We are also dealing with the issue of indebtedness to the trust, both in the private sector and in the government sector. As some of you may be aware, our engagements with the government resulted in the government paying us about 2.5 billion in bonds of arrears. In the private sector and the quasi-government institutions and the SOEs, we are having in place negotiated agreements which are going to ensure that the indebtedness is also met. And if there's a message out there, if you don't pay your SSNIT, we'll prosecute you. But again, the more overriding message is that you should ensure that you get on this SSNIT scheme, because it's the best in town. On the investment side, we haven't stood still either. We've implemented strategies to ensure that we improve returns over the longer term. We are ensuring that we are managing funds very prudently, and we intend to do so going forward. The investments in technology we are making is ensuring that we are much more efficient than we were, and going forward, we are going to be even more efficient than we are currently. Can I have the next slide, please? One of the concluding statements, and this is probably the most pertinent one, and I would read that, and that puts into perspective what the ILO actual report is about, is as follows. The main purpose, and this wasn't the conclusion, the main purpose of the 2020 valuation was to find out whether the financing of SSNIT is on course over the long term, but not to exactly forecast numerical values. Due to the long-term nature of assumptions, absolute figures include a high degree of uncertainty. I'll just add the emphasis at the end. Absolute figures include a high degree of uncertainty. Therefore, results should be interpreted carefully, and future actuarial reviews should be undertaken on a regular basis to revise actuarial assumptions in the light of the actual experience of the scheme. In short, it's based on assumptions, it's giving us a guide to what we need to address, and we are addressing those. And we should not use the report as a basis for saying that SSNIT is going out of business. It certainly is not. And it's in our interest to ensure that the message goes out. We are all beneficiaries of the scheme. The other issue which was raised in the press was to do with Grand Regency Hotel, which is, I think it was the old Kumasi catering guest house. And it was alleged in that in our negotiations with the buyer, which was Rock City Hotel, we lost value to the states. There's nothing further from the truth on that. So it's something that we want to emphasize and make clear. We valued the 25% stake for 6.684 million Ghana cedis. This was done by the Ghana Institute of Surveyors. So it's not a SSNIT internal valuation, it was done independently. Towards the end of 2021, that was for a 25% stake. We sold that stake not too soon after for 7.4 million. We made a gain in that sale. It's being alleged we made a loss, we made a gain. I'm not too sure how you read negotiations and assume that the starting points for the negotiations, and as stated in there, represents the valuation simply because in the negotiations that is what was sold. I presume if most of you are selling your houses or your cars or anything else, you are not going to go and start and say, well, the value is this low and therefore let me start there. You start from a higher figure and want to end up somewhere, which is acceptable, and that's exactly what we did. We did make a profit on that sale. Can I have the next slide, please? Another issue that was raised, and this was in the very recent document we saw in the press, was to do with the transaction advisors report dated 24th May 2024 on the Rock City proposal. And this one I find even more curious, because if you listen and we've gone by that. And so negotiations are ongoing. So if we don't accept an offer based on our process and based on the advice of the independent transaction advisor, and we seek to negotiate better, I am not sure what is the wrong in that. I really don't know what is wrong with that. If anything at all, it says that we are doing the right thing. Let's touch on the next slide, please. The other issue that has come up is this right to information business. And again, this is one of the issues that was raised, which we found very surprising. I think we woke up one morning to see something in the press on Joy News and My Joy Online saying that we had turned down a right to information request. So we followed up, and the answers that we got were very unsatisfactory. And that is that they brought the papers here some fair lady opened them up and said she cannot accept them. That doesn't happen at SSNIT. All the rights to information requests that have come have simply been addressed to myself. They never come and hand them in personally. Our mailing system works, and it gets to us. It does get to us, or it goes to the right to information officer. And contrary to what has been asserted, we do have a designated right to information officer. And they have been responding to requests since 2021. So I'm not exactly sure how someone then comes here, claims to have handed something in, and then seeks to then score points on that, saying that SSNIT turned down their right to information requests. We have nothing to hide. Absolutely nothing. We do have an right to information officer. And in fact, when you even go through it further, SSNIT was one of the 8 public institutions publicly commended by the Fourth Estate because of the way we've responded to these requests. So far from trying to hide information, we are very open about it. So we take very strong issue with claims that we have turned down a right to information request. In fact, what the law allows for is that if you have an issue, you bring it up to the institution for redress first. So I didn't even see the necessity. I am sure that if Joy Online, or my Joy Online, or Joy FM wanted to have the issue addressed, they could have addressed it to me, or they could have come up to me for redress. And indeed, after we saw that, we asked them to bring it to us, and it's been submitted. So this business of we have some information to hide is just not true. And we take very strong issue with that. Another issue that's been in the press, given all these issues about hotels, is the claim that has been made that by Mr. Freddie Blay, that his son's company, Spartan Ives, bid $150 to $200 million, and SSNIT turned it down. Again, that can't be substantiated. And I want to take you through the process and Spartan Ives' involvement with the trust. The way the process works is as follows. This process was on the procurement methodology was a cost and quality basis. What that means is that we assess the technical and financial proposals that you bring. First, you bring your technical proposal. You submit that. Everyone does. The proposals are opened in front of everyone. They go to an evaluation panel. It is scored. Once it is scored, and you get past the passback, we then assess your financial proposal. That is the process, and that is what the law requires us to do. We did exactly that. Spartan Ives did not get past that stage. Their technical proposal was weak. They scored below the required 50%. And so their financial proposal was not even assessed. The envelope was not even opened. It was returned to them. That is what the law requires us to do. And we did so. And all of these are in the minutes. So if there's anyone who wants to challenge them, we are very happy to oblige. So to say that SSNIT received an offer of 150 to 200 million and turned it down is not accurate. With all due respect, it's simply not accurate, because the offer was never made. The offer was never even opened. They failed at the technical stage, and therefore this assertion that they offered us 150 to 200 million can't be substantiated. In fact, they could say anything they want to. But it's simply not accurate to say that SSNIT was made an offer of 150 to 200 million, which we turned down. It's not accurate. And it's a bit disingenuous to really state that as a fact. Can I have the next slide, please? So let me now go to the justification for us looking to sell a 60% stake in our hotels. And again, I think that we need to put it into context with respect to what we do at SSNIT, with respect to investments. What we seek to do at SSNIT is to improve investment returns. So if a part of our business is yielding substandard returns, we have to address the issue. We have to address the issue. So for us, the commercial rationale is not in doubt. For starters, we're looking to raise capital to invest in the hotels business, to raise capital for the fund. As we noted, we are looking to take our hotels business to a world-class standard, and that's why we're looking to bring in private investors. And we're looking to do so by funding any further capital that is needed from the capital we raise from selling our equity. And indeed, given we are going through negotiations, there is scope not to even deploy all that capital, or even deploy the capital in the hotels business. We can deploy it elsewhere. And it's very consistent with the Trust's strategy and investment policy. I don't think anyone running an investment fund anywhere in the world would be sitting on assets which are earning substandard returns and seek to do nothing. That would be unusual. We have to address the issue. And so we sought to do that. And that is if you look at these hotels, they are capital-intensive businesses. Hotels always are. They require periodic, heavy capital expenditure. They require continuous capital expenditure. SSNIT does not have the surplus funding to do that. The businesses have been making consistent losses by and large, or returns that we deem to be below what we find acceptable. And if we have businesses that by and large are yielding us returns that are below what we find acceptable, even if they are profitable, we would look to divest the stake to deploy elsewhere. And so we've outlined the reasons on the slide there. Consistent underperformance, requests for maintenance funding, the required capital injections, the high capital expenditure needed, and all of that for us calls for the need for a strategic investor. And we've been through quite a lengthy process to do so. Bear in mind, we've also tried having external management companies running SSNIT, running the hotels, the SSNIT hotels, beg your pardon. And that hasn't resolved the problem either. So for us, we look at it twofold. That we are looking to resolve a problem and do so with the introduction of a strategic investor. And we've outlined the reasons there. Consistent losses by almost all of our hotels. I know you are aware that Labadi does make a profit, but the returns are below par. They haven't paid us any dividends, with the exception of Labadi. Labadi Beach Resort only started paying dividends for the last 2 years. They haven't from inception. We've been called in to fund capital expenditure and maintenance expenditure and even SSNIT contributions of the workers. In fact, a group of the hotels cannot even afford their auditors' fees. And so, accounts since 2018 haven't been audited. And if you put all of that together, what we have to do is to take action. And that's what we are seeking to do. So those are the hotels. Can we have the next slide? Let's look at the track record of these hotels. And I liken it to you having a business or an asset sitting there that is not earning you any money. And every year, if it's worth 100 cedis, the business comes to you and says, put in an extra 10 cedis. Or it's worth 100,000 and says, put in an extra 10,000 every year. And you are not being paid any dividends. The business may even owe you in terms of loans. The reality is that any rational investor or business person would be better off divesting the business and putting it somewhere else. And so for us, we are looking to do exactly that, which is to improve the returns in our portfolio. We can simply not keep throwing money into it. So if you look at that table, it gives you what the 5-year average profit after tax is. You can see a lot of negatives in there. You can see that they haven't paid dividends, with the exception of Labadi in the last 5 years. Significant losses in La Palma and Ridge Royal, and indeed the others that make profits, they're not significant. And again, just to highlight, a significant amount of money has already been pumped into that. Well over 200 million has been put in the GBH hotels with no return in sight. Let's start looking at the hotels individually. And again, it's just worth noting for the GBH hotels, and starting with La Palma, the history is relevant because, to start with, we injected a significant amount of capital. When we sum it to date, I think it's coming close to well over 230 million in shareholder loans and capital spent on the hotels. None of that has yielded anything to us. If we look at the profitability, the dividends, the returns, there's nothing to write home about. 11 out of the last 14 years, La Palma hasn't been profitable, has not paid us any dividend, and again, they're struggling. Average return is minus 4.2% in the period preceding the decision to divest of our 60% stake. If we look at Elmina, the picture is not that different. Indeed, it's 9 out of the last 14 years has not paid us a dividend. The money we put into that really hasn't earned us any returns. The returns are negative over the period preceding the decision to divest of our 60% share. If we do Busia Beach, it's the same. No dividends, losses in most of the years, and returns negative, indeed minus 31.7 for the period 2010 to 2017. It puts everything into real perspective and why we would want to improve it with private investment. Ridge Royal, again, the picture is similar. And for the short period, returns that we've owned it, returns are negative. That's since 2016. And a significant amount was spent on this hotel. In fact, the hotel owes us 44 million in the investment that we put into the hotel. And none of that has been serviced. So again, just put that into perspective. If you were in business, what would you do? Labadi Beach, losses in 2 out of the last 14 years, has paid dividends in the last 2 years, but the returns have been low. The return on equity, which is the returns measures that we've been talking about all along, is 1.7% over the period 2012 to 17, and 5.2 for 2012 to 2022. Now, I think there's a big issue here where everyone says, well, it's making profits, and so we shouldn't be selling a stake in the hotel. I take a slightly different view. And the way I look at things are as follows. There's been a great culture, particularly in the state sector, where we run down assets to sell them. You run into the worst, the building goes out of business, and you sell it. We want to maximize what we get out of it. And the question that I asked somebody the other day is, if you were selling your car, or even your house, if you were selling your house, you would make an attempt to actually paint it. You wouldn't wait for your car to be put on stones and then say, now this is the time to sell it. You would make it look good. There is no reason why, if a business is doing well and we seek to maximize capital from it to invest elsewhere, we shouldn't do so. And the reason is simple. Returns are lower than we believe they should be, but also cash always has alternative uses. So why not? There's a good investment rationale for that. The key premise of our strategy in our listed sector is to improve and restructure non-performing investing companies. We want to improve their profitability and ensure that the SSNIT scheme is sustainable on a long-term basis. And hence the objective to diversify our stake in these hotels. Let's talk about the procurement process. And I think that is also something that has been talked about a lot. In fact, I think that most people have been led to believe that we didn't go through any process at all. We simply started off and we got here. 15 firms expressed an interest, 6 were shortlisted, and the successful firm was sent some capital. The independent transaction advisor then guided the process to the selection of a strategic investor. That process started in 2022. The independent transaction advisor led a consortium of 4 firms which were looking at the legal due diligence, the valuation, and then we had a hotels expert, and they were the 4th firm, and that was the consortium that guided us through the process. Now, as you can see, that selection took place in 2019. The process resumed in 2022. That selection process, if I may say so, and I should, was through an international competitive tender. It wasn't hidden from anyone. Advertisements were placed in the newspapers and in international magazines. So it was an international competitive tender. In 2020, as you all know, there was COVID, so there was no activity. In 2021, the International Transaction Advisor resumed its work by undertaking the necessary valuation and all the other, let's call it, I would say, all the other issues that were under its scope on the terms of reference. And that included helping to draft the expression of interest, the request for proposals, in addition to undertaking the valuation as well. All this was done in 2021. So we proceeded in 2022 to continue the process with the selection of the strategic investor. Six firms qualified. And this came before the Entity Tender Committee of SSNIT on the 25th of May 2022. 6 firms qualified: Rock City, Yawado Development, Spartan Ives, Temple Investments, Westridge, Luxor, and these included international firms as well. What we did from inception, and it's very important to note this, is that in order that we are not left with any of the hotels on our hands, we lotted the hotels. So lot 1 was La Palma and Labadi, lot 2 was Ridge Royal and Elmina, lot 3 was Busia and Trust Lodge. Under the rules, and they were explicitly stated at inception, any bidder could bid for any of them, but if you were successful, you could not own more than 2 lots. Those were the rules from inception. They were not made up when we got to a certain stage. They were the rules that were in the request for proposals. So those rules were clearly stated at inception. It's lotted, 2 hotels by region in a lot, and you could not be the preferred bidder on more than 2 lots. And the rationale was to just ensure that we are not left with any of the underperforming hotels. Well, what happened as a result? And bear in mind, there was no way of knowing what the outcome of this would be. Rock City placed a bid for all the 6 hotels. They were the only bidders. After that length of advertisement, they were the only bidders for lots 2 and 3. Lot 1, there were 6 others. So lots 2 and 3, they were the only bidders. Lot 1, there were 6 others. They came up on top after the evaluation, after we assessed the technical and financial proposals, and they elected to continue the process with lots 1 and 2 as their preferred lots. I want to touch on the evaluation and the bid results, since that's also been a relevant issue that's been raised. hotels were valued independently by the transaction advisor. There are three methodologies that were used: replacement cost basis, going concern basis, and the price of a recent investment methodology. So replacement cost simply says that how much is this going to cost me, or are the assets of the company going to cost me to replace? How much are the assets of the company going to cost me to replace? It's to do with the assets, not to do with the company. The second methodology is a going concern basis, which is that you forecast the cash flows of the business over a period, and you look at the present value of those cash flows, or the present value of the business based on that, the net present value of the business based on that. It's a going concern basis. And that methodology you use when you are assessing a going concern or a company that is operating. The price of a recent investment methodology essentially looks at the value of the hotel compared to recent transactions of similar hotels in the region. And that is the most appropriate methodology, and that is what was advised by the transaction advisor. And I can also say that that is what we internally believe should be the way we should assess the valuation. Can you go back? The going concern basis would give you, depending on where you are trading, i.e. where your business is, could potentially give you a lower value if your business is currently in losses. But it's one that you would take into account. It could act as potentially a floor. The replacement costs would be on the high side, but it's the replacement cost of the asset. If I asked you today what the replacement cost of the SSNIT building that we are in would be, it would be much higher than what you can sell it for because of the state of the building. And it's not an appropriate way of assessing the value of a company that is a going concern. And so if you really want to do that, you're looking at valuations 2 and 3 on the presentation slide. Let's look at the bid results. Now, in the bidding, what the companies were required to do is they were required to give us an assessment of what they believe the 60% equity stake in our shares or the companies are worth, and then also present a plan where appropriate of what they were going to do with the business going forward. So there was an elaborate capital expenditure plan provided for La Palme and Elmina. And indeed, for Elmina, it involved a total rebuild of the hotel at 45 million. And in the case of La Palme, it looked at expansion, or an expansion plan that was going to cost about 90 million going forward. And so that proposal was assessed along with the price that was put on the 60% shares. And that together went into the technical and financial proposals. So let's look at the bids. For Labadi Beach Hotel, Rock City bid 29.4 million. The closest bid above our recent transaction valuation. For La Palm, they were approximately 7 million, and this is all in US dollars, mind you, approximately 7 million above the next closest bid. For Ridge Royal, Rock City were the only bidders, and for Elmina, they were the only bidders. Bear in mind that since they could only bid for the 2 lots, the other 2 bids are considered to have failed. So that was not part of the equation going forward. Now, if you were in the trust's shoes, I'm not exactly sure what you do differently, but accept the highest bids on the table and then proceed to negotiate. And that is what the trust did. A negotiation team was formed, and then we proceeded to negotiate on the terms of the payment, on the price, and also on the capital expenditure plans going forward. That is also a subject of very complex negotiations, which should then go into a shareholders' agreement. I think one of the issues that I would stress on again, and I would want to stress on it, hence we have a separate slide on it, is this price of the recent investment methodology and why it's the most appropriate. If you take a 5-star hotel, you look at the most recent deal, so this one would have looked at, say, the sale of Movenpick, which has changed hands in recent years, look at what it costs us, and then determine the valuation on a per room basis. And the hoteliers call it price per key. That's standard industry practice. And that's the appropriate way of looking at things. And that is exactly what we did. And that is what determined the way we look at things. Let's have the next slide, please. I think I've talked about this, so let's have the next slide. So for us, in summary on this process, I think some issues are very clear. One is that we've gone through a very transparent process, a very lengthy one. The process has involved an independent transaction advisor who's advised us all along. Everything has been above board. And we've come to the point where we are negotiating on the price. The negotiations fell through, and by that, what I mean is that we failed to agree on the payment terms. We are currently engaging all stakeholders on the way forward with respect to the negotiations. And that, by the way, is what can be done under the memorandum of understanding that we signed with the preferred bidder, that it allows us to negotiate on the payment terms. We are fully aware that, of course, the unions raised an issue with respect to the terms of payments. I see the union position largely not different from what SSNIT wants. We all want a better SSNIT. I don't see their position as different. So we will continue to engage all the stakeholders. Whatever has been raised by the unions, some of what they've raised were also raised within SSNIT. Others, I believe there's a misunderstanding and issues like the lotting and so on. But otherwise, on the central issue of the payment terms, there's no difference from what at SSNIT we believe, and our position internally is not much different from what the unions have raised. And so we are engaging the stakeholders, and as I've said previously, we will continue to engage all stakeholders in order to get to a conclusion that works. And the outcome cannot be predetermined, of course, but we'll continue to engage. There was one issue that has also been raised, which again, can you go back? Yeah. Which was raised and which was with respect to Rich Oil. And the issue is also a bit of a curious one, but has been raised nonetheless, and that is to say that we are trying to oppress the minority shareholders. I think that is the right word. And that we sort of acted contrary to the rules when we decided to sell Ridge Oil. Now, this is also, again, in my view, not accurate. SSNIT owns 95 or has a 95.64% stake in Ridge Oil. The minority shareholders are Hoy Plaza and I believe it's Vanef, own 4.36%. There is a shareholders agreement. The shareholders agreement asks that we notify the minority shareholder, we tell them the price of our stake that we are selling, we give them the time that is stipulated in the agreement. In this case it was 45 days, to match the offer. To match the offer. We did all of that. We informed them at the correct time that Rock City was the bidder, that they had bid 8.4 million, plus additional refurbishment expenditure of 2 million, and that we're giving them 45 days to respond. That is what the shareholder agreement stipulates we should do. We have acted in line with that. Nothing else in our view matters. Now, if the shares were being sold for cheap, it's a surprise to me why in the 45 days the minority shareholders have not offered to purchase it, because they have the right of first refusal, and we've offered them that right. So if they didn't, there's not too much we can do about that. But the noise around it really is just not appropriate. It doesn't reflect the facts on the ground. As you're all aware, there's a petition at Shraj regarding the issues. And what we've done in the presentation to this point is really to address all the key issues. And so I just want to highlight the issues that we've addressed and that were petitioned to Shraj. So let's start. So the first one is that the notice of expression of interest did not meet due process and good corporate governance standards. I think that is very obvious. What we've shown you is that we went through a process starting in 2018. It was approved by the board. In 2018, once we started the process, we went through each and every stage. The board set up a hotel steering subcommittee, which helped with it. There was an independent transaction advisor. We then went to international competitive tender for a transaction advisor and also for the strategic investor. That is good corporate governance. and it's been and that is wrong. It's far from the truth. If you start something in 2018 and go through all the processes, it can't be really described as being hurriedly put together with a preconceived outcome. You can't really determine the outcome when you put something out there on competitive tender and advertise in the local and international newspapers and on the PPA website. In fact, this was even raised in Parliament a few years back. When I attended the Parliamentary Accounts Committee, the non-performance of our hotels was raised as an issue, and we addressed it by saying that we were looking for strategic investors. So there's nothing that has been hurried, there's nothing that has not been transparent about this. The third point is that the transaction with Rock City Hotel contradicts SSNIT's initial request for expression of interest, and that is inaccurate as well. Totally inaccurate. All the rules were set at inception, including the lotting and all the processes, and the outcome is what we see today. The fourth point, financial performances of Labadi Hotel and Ridge Royal indicate healthy business interests. I think I've shown you what the profitability of Ridge Royal is. I think that for Labadi, we have highlighted that yes, it is profitable, but the returns for us are below where we think they should be, and hence that is part of the process. The fifth point, SSNIT's statutory obligations to pensioners are at risk, with recent reports raising concerns about SSNIT's ability to meet future obligations due to mismanagement. Again, that is inaccurate, very far from the truth. We've been through the ILO report, and we've highlighted the measures that we continue to take to ensure the sustainability of the scheme. In fact, this process really underpins the fact that we are working on improving the sustainability of the scheme. No portfolio in the investment world is static. Then I'm not sure you can talk about any such portfolio. I really can't see a pension fund that will sit down and not touch anything within the portfolio. So things have to change. Portfolios have to be dynamic. And so we must always bear that in mind. SSNIT, just as we are doing now, will in future consider divestments of shares, be they listed or be they unlisted. It's part of the process. Likewise, we will look to acquire, and indeed, we have been acquiring shares of listed companies. During the recapitalization of the banking sector, we added significantly to our shares in Société Générale, which is a very strong and thriving bank. We added to our shares in Fidelity Bank. We are the largest domestic shareholder in that, same for Société Générale. We added to our shares in Republic Bank. We are the largest domestic shareholder there, again a thriving bank. We are the largest domestic shareholder after the government in Ghana Commercial Bank. We are a shareholder in Standard Chartered. We are the largest domestic shareholder in MTN. That is a dynamic portfolio. So we can't just sit on our hands and do nothing. We are constantly changing things within the portfolio. If anything at all, the liquidity of the market probably doesn't allow us to do that as much as we would. So that is a point that I want to raise. This process of managing funds for the sustainability of the scheme is a dynamic one, and so it should be. Concerns about job security, again, that is very much misplaced. If we are going to see the refurbishment of the hotels and an expansion of some of the hotels, it rather creates more jobs. So again, I don't see how that is consistent with what we are doing. I think there's also been the issue about us treating the hotels differently. I'm not exactly sure what is meant here, but it says SSNIT initially treated all 6 hotels uniformly, disregarding their individual circumstances until faced with agitations. I think again that is wholly inaccurate. The process was laid out at inception and has been transparent to date. The evaluation of the hotels was done by an independent transaction advisor with consistent methodologies all through. The assessments and evaluations were done per the procurement rules. And nothing that has been raised with regards to terms of payments is different from what SSNIT itself has assessed internally. And as I said, the process is ongoing and we are engaging all stakeholders. We are accused of acting arbitrarily, capriciously, okay, more English, or in a biased manner in its investments and divestments of decisions. Again, in my view, it's just not accurate. I'm not too sure what I can say about the words capricious and biased, but again, it's just not accurate. So we must really note that whatever we do at SSNIT, we have a set of investment guidelines that have been approved by the NPRA, and that guides what we do. Allegations of corruption, lack of transparency, cronyism, lack of value for money, deception, procurement breaches, accountability, graft against board and management of SSNIT. I think for that one, it looks as though they were looking at every other single thing that was around and put it together. But none of that applies. It's been transparent, free of corruption, and indeed very consistent with corporate governance rules and standard and corporate governance practice. So, ladies and gentlemen of the press, I'm very pleased that you've taken the time to attend this press conference. I will conclude as I started, that SSNIT offers the best proposition with respect to pensions in the country. We are committed to ensuring the sustainability of the scheme. We are going to implement investment policy and strategy that would improve returns, and we continue to do so, and also manage the risks of the portfolio. We are going to manage the costs of SSNIT and ensure that we are more cost efficient. And just as importantly, we will continue to engage all stakeholders. And we cannot really forget the issue about engaging the government on indebtedness. That is an ongoing discussion that we're having with governments. And for employers, that dialogue also continues. So ladies and gentlemen of the press, thank you very much for your time. We're very grateful for you being here. Thank you. Take the question now.
Shall we put it together for DG? Thank you, DG, for such an extensive presentation. I'm sure you have questions to ask. We're going to take 3 sets of questions. And because of the way the cameras have been set, if you have a question, please raise your hand. You come up here, you ask your question, and then we'll respond when the set is over. So if you have any question, may we see you by hand? Please come forward.
Clarification, if I should say. I was expecting to hear, my name is Marshall Frey from the Chronicle newspaper. One of the issues out there from the Member of Parliament for Northton is that Rock City did not submit tax clearance, but was able to bring the bid. What is the true state of that, please?
Let me just answer that so that you don't. I might as well stand there. So let me stand there. Just to answer that question, Rock City submitted a tax clearance certificate. We verified the tax clearance certificate.
Hello, my name is Calvin Powell from Joshua TV. So I have a couple of questions here. Didi, please, in your submission, you made mention that Mr. Blaison's company presented a weak technical proposal. Can you give details? What made it weak? What criteria could it meet thereby bringing their proposal weak? And the second one is, you also made mention that the hotels that you are selling these days in have not been paid dividends, but we have managers in posts who are being paid salaries and allowances. Quite recently in Palm Royal, I read in the news that the CEO was to pay some allowances in dollars for acting in the absence of the GM, if I'm right. How come an institution that is making losses, someone who is already being paid as a CEO, is being paid again for acting in someone's absence? And this very institution is not paying dividend. What oversight responsibility does it have over its investment in that respect?
Do we have some more people?
My name is Dario Boku. I represent the DJ. My questions are two. Question number one, I didn't hear any part of your statement indicating to your position on the National Pensions Regulatory Authority. The NPR being the regulator issued a statement somewhere last week where it says that there's a need for us to suspend this whole process and now for further engagement or other problems associated with the agreement to that crash. How do you respond to the NPR? The second question is by Forum and the public sector institutional unions, who have last week issued a statement that there should be total termination of these agreements. How do you respond to that? And finally, on Wednesday we are meeting President Anna with maybe some members of organized labor, led by Dr. Yahoo, President of TUC. President says you should look at the agreement again. What exactly are you going to tell the President already when labor unions want the issue terminated? Thank you.
Okay.
So we take the last for the set and then.
Okay. So let's go through it. Let me respond to the last ones by TV3 first. NPRA and the suspension. Yes, NPRA did issue a letter asking that we suspend. Operative word is suspend. And what they noted in the letter, if you actually went into the details, was that we had met with them and the meeting was inconclusive. And what exactly that means is that we had an initial meeting and we were due further meetings or a meeting, and we've done those further meetings, or we've had a further meeting to correct it. And so once we've done that, we will await what NPRA has to say. But the suspension is not inconsistent with engaging stakeholders. Indeed, NPRA is the regulator, but it's also a stakeholder. It does represent stakeholders. So when I say that we are engaging stakeholders, that includes the NPRA. So our current position is not inconsistent with what NPRA has asked us to do. The issue of the stakeholder engagement at the presidency, yes, we did have an initial stakeholder engagement. Another one is going to take place this coming Wednesday. I am not sure about what you mean by agreement. What's the question?
Yes.
What do you mean by agreement? I don't get you.
I said you are meeting the president on Wednesday.
Yes.
So my question to you is that definitely are going to have some labor programs over there.
Just as we did the last time.
Very well. So
Yes.
my question to you is that what is that I'm going to tell the president? What are you going to promise the
what we are going to have there again is a stakeholder engagement. So what I am going to say over there is not Wednesday. When we get there, we'll engage the labor unions. The engagement is not going to be done through the press. So you should understand that we had an engagement. We've also had an engagement with the NPRA. Once more, we will have another engagement. And if it's deemed necessary, we will continue to engage. I think that is the message. And it's not changed. So I think that's a point that I would like to make. So the other question was on the weak proposal. I'm not sure I really need to share those details about weak proposals. An assessment is made based on the technical proposal that is put forward, i.e. What you intend to do, the people you are seeking to employ to undertake it, and all other criteria which have to be consistent with what we put out in the request for proposals. We then assess that across board. If you score the weakest, you score the weakest. And I think that is about it. And Spartanites are fully aware of that position because we returned their financial proposal to them unopened. So, in fact, I've been giving some details here now. Let me see whether I can. Okay. 2 central points. Specific experience of the investor relevant to the project, and then adequacy of the proposed development plans in responding to the terms of reference. So I think that probably is not much different from what I've said previously. The criteria is set out. What are your plans for the project, and how well positioned you are to execute? And they were found wanting on that. So I think that answers that. Now there was a question that was asked on La Palm not paying dividends and payments made to the manager for acting. Yes, those payments have been reversed, so the manager has been asked to pay those back, and the board is looking at that. With respect to management in general, what I would highlight is that we continuously seek to improve the underlying operations of the companies. Indeed, I did highlight that in contrast to what people expect from SSNIT, by and large, we even set KPIs and targets for our companies, and we continuously assess. And based on that, we take decisions. I think with respect to the hotels, we've been through all of what I've noted, and we've taken the decision that and we would benefit not only from a substantial amount of capital coming from an investor, but also private sector management. The issue with hotels is that it's not simply about management. If you've had a hotel which over 20 years you've not invested in, you will become uncompetitive. And we've not had the surplus funds to do that. So some of these hotels have become uncompetitive, hence the need for capital. And that is also a very important part of what we need to make our hotels businesses competitive. It's about capital. And we cannot ignore that position with respect to the performance of the hotels. Yes, I did respond to that. If there was any doubt about that, Rock City submitted a tax clearance certificate and it was verified.
My name is Rashid Ogudak from South. I work with Rainbow Radio. My question has to do with the one who won the bid. You already made it clear that the hotels are not being sold. Are you going to go at a loss, or the process is going to be declared void should you move from Rock City and award the shares to the second bidder who provided a much better technical and financial proposal? Because there are, what do we call it, nepotism allegations surrounding Rock City. There's an allegation that the one who won the bid is a cabinet minister. He may have influenced the process. So is it the case that you can select the second best bidder, or it's a cast in stone process that Rock City should get the shares in your hotels that you are selling?
I think first of all, there's nothing cast in stone. Secondly, there was nothing with respect to nepotism or whatever you would call it in this process. Mr. Professor, as you quite clearly saw in the presentation, the process was open, it was fair, it was an international competitive tender. We could not have determined the outcome beforehand. So I'm not exactly sure why you expect that the company that won should then drop out. So currently, what you are talking about really is not a consideration. If we do not reach agreed terms with the bidder, we will then go back to our board and then assess the way forward. We haven't sold the hotel, I dare emphasize. We are in a process of negotiations. There is no predetermined outcome. Once we engage stakeholders and we also engage our board, and the bid is seen as sufficient, we proceed. If it is not, we don't proceed. And then we'll make an assessment on the next steps. So I hope that answers your question.
Would there be any legal ramifications should you refuse to give the bid to the one who won?
Will there be legal ramifications?
Yes.
Why would we refuse to give the bid to the one who won? We are currently negotiating. If the terms are not acceptable, they are not acceptable. Why would there be legal? If you are buying something from someone and the person says they don't agree with the terms of payment, what is the legal ramification? There isn't any. So I'm not exactly sure why there would be.
suggest that I should go to the next step. That's what I said. I don't have a question.
Well, look, at the end of the day, we are going to cross that bridge when we get there. I'm not sure why we necessarily have to accept that price. I'm not sure why we have to accept that price. I'm not exactly sure about your logic. But no, once we get there, we'll make an assessment of those two.
I am Kodio Mesaro. I work with Adum TV and Adum FM. I need a bit of clarification. In your presentation, you made mention that structural IBs fail at technical proposal stage, but the same presentation, the 6 that qualified, Spartan was there, so I'm a bit confused.
Spartan was shortlisted and then the assessment started. Okay. And they failed at the technical stage.
Okay, thank you.
Hello, my name is Ben Sabote from Media FM. My first question is, in the past 3 to 4 years, if I'm mistaken, Labadi Beach has been doing well. That's Labadi Beach Hotel. So is there a way we can take out Labadi Beach Hotel so that, you know? And then secondly, I don't know if I missed that on your presentation, but is there a way we can get, instead of having a strategic investor to take over, why not hiring management services? I mean, I know many people have given suggestions on that. Have you considered that? And if they still have to come on that?
I think those are good questions. The bid process is the bid process. We set the rules out with an objective. The objective was to divest ourselves of a 60% stake in our hotels across the portfolio. So what we set out in the request for proposals was that lot 1, lot 2, lot 3, we are looking to divest a 60% stake. So taking one out has to be an outcome of the negotiation process. Otherwise, it's not something that was envisaged at inception, because that is the way it was structured. So I don't see that happening. I guess the other point that I would make is the point that we made all throughout the presentation. It's not simply about profitability. It's not simply about profitability. It's about the business being able to finance the required capital expenditure, be it by internal or external means. It's about the returns on equity or investment of the business being adequate. And finance will say that for returns to be adequate, they must at least be equal to the cost of capital. If you have returns over the period being about 5%, in anybody's books, that is low. And then thirdly, I think the other point we should make is that we are also looking to maximize what we get from our assets. I don't think that we should see a portfolio as static. I think one of my senior fund managers in my early days to talk to me something, he said, there's nothing wrong with your profits in the bank. There's nothing wrong with actually making money on an investment. I'm not sure why there's anything wrong with that. So if we look at Labadi and we think, you know something, we can raise some capital from that, put it in something else, why not? Is there going to be a complaint if tomorrow you hear we are selling our stake in Bank A because we want to move into fixed income investments? Would you say that we shouldn't sell it? Because maybe somebody in the union, for example, some other stakeholder has a different opinion? That's not possible. So we need to see the portfolio as dynamic and we'll act accordingly. Your issue of management services, I think in the presentation I highlighted it, but maybe I'll probably explain a bit further. Labadi and Lapalm actually had international management company. They were called Legacy. I'm sure some of you know that, yes. So the GBH chain was still making losses with Legacy. So I'm not sure why there is the need to continue experimenting with that. And we terminated the agreement with GBH. We negotiated our way out of it. That you would realize that in 2016 or 2017, if you can go back then, prior to this process, Labadi was actually making a loss. Labadi was making a loss. So part of the recovery process and part of the restructuring process actually been that we took the management company out because we were taking a share of revenue and a share of the gross profits, and we never got any dividends. So does it mean that if they are there, we are better off? The answer is no. So I think we should, again, see things a bit differently. So we've tried all the various models. For us as a state institution, or quasi-state institution, or a trust, it hasn't worked. We are an investment fund, and so we have to take a decision around that. And I'm very conscious of the fact that not everybody will agree with the decision of bringing in a private investor. Not everyone can agree with it.
Thank you very much. So we take the last set of questions. Please come forward here so that we'll be done quickly.
Please, I want a clarification with regards to Rock City. You mentioned that because they want the two lots automatically rich and then Lena failed. I want to. Okay.
Let me explain.
Thank you.
Let me explain.
I don't know if I should ask you another question very clear. Okay. I just wanted to be clear on that point.
Okay.
The second one has to do with this. Have you received an RTI request from the Member of Parliament from Northton?
Yes, we have.
Okay, so you mentioned that.
And his didn't get lost.
So for the purpose of.
So the day, that's for the purpose of clarification. The day we heard it in the press, I got the letter addressed to me in the evening. So, and it was addressed to the Director General. That's simple. I don't know how he delivered it, but it got to me, like all others. And I can tell you with these RTI requests, there's one gentleman, and I think his name is Isaac or something. He's brought in so many RTIs, I might as well invite him for an interview. So it's normal. We have nothing to hide. If there are issues that we need to address, we'll address them. I don't think that's an issue. On the lotting worked as follows, and this was from inception. What we decided with the lots is that the hotels were grouped. So lot 1 is Labadi, Lapalm, lot 2, Ridge Royal, Elmina, lot 3, Busia, and Trust Lodge. You can bid for all of them, but you can only be the preferred bidder on 2 lots. That is, you can own 60% in only 4 of the hotels. So given that they were the highest in lot 1 and lot 2, and they expressed a preference for lot 1 and lot 2, they selected those 2, which means that the third lot, since they were the only bidder, it's failed. That's the process there.
Okay. Thank you very much, Gigi. My name is Christopher, and I work at class 91.3. Gigi, you told the story of SSNIT, which is encouraging, it gives us hope. And you also told, or you said the story about SSNIT having a lot of majority investment and shares in other ventures that are doing well. You touched on Fidelity, you touched on Society, Genuinity, and among others. I want to find out from you, with these hotels in question now, are there other firms or are there other ventures that SSNIT has plans of selling their shares off in the future? Because I know as SDC, you have shares in it and SDC is actually suffering. What find out are there other portfolios that SSNIT into the future would obviously sell off their shares in the coming days? Thank you.
I like your point about in the coming days. but as I noted, it's a portfolio and we'll continue to look at our investments, and those that are not doing well, we'll look to improve them or we'll look to divest. One of the companies that currently, and indeed, it's a listed company or it's a listed company which has been suspended, is Aluworks. We are currently in negotiations with a potential buyer of some shares. So we are placing shares, or the company is placing shares in the marketplace. The outcome will be that SSNIT will go from a majority 62%, approximately 62% shareholder, to a significant minority. Those negotiations are ongoing. The background to it is that Aluworks now is shut down. So, as the largest shareholder in what is a listed company, and also the largest debt holder, we are playing an active part in that restructuring process. And if we do come to an agreement, it will result in SSNIT being diluted significantly. But we are better off being a small percentage of something rather than a large percentage of nothing. So these discussions will continue. And where we can, we'll look to divest our stake or look to other measures to improve performance. So no, it won't be the last.
Okay, so just a follow-up. What about SDC? And then when you divest, where are you venturing?
I think our strategy, as we've noted, is that when we look at our asset allocation, we need to increase our exposure to fixed income. And that is the strategy currently. We are looking to monetize a significant part of our ventures and real estate portfolio, and we are looking to go into fixed income. STC, there hasn't been any discussion yet about selling our stake. But again, I think that is a discussion that will come to board if the need arises, and I wouldn't want to preempt that.
That was the last question.
That was the last question. Okay.
Thank you very much. That was a very short applause. Thank you so much. So we've come to the end of the presser. On behalf of management, I'd like to say thank you to the media houses for representing. And we're happy that each time we call on you, you really honor our invitation. We thank you so much. And for the managers who made time to come here, we are so grateful to you. Thank you very much, and you have a very good day.
Thank you.